Hey guys, welcome to episode 22 of the Fire Fun Friday series. The market slowly recovered from last week's meltdown, so I did not buy as many of my go-to stocks, but I did make a really big purchase that I want to share with you guys. And as far as options trading went, all of my collateral is tied up in a bad trade, so it's not a great week for me. I'm going to break it all down, so if you're ready, let's get into it. On this channel, I talk about all things finance, wealth building, and how you can achieve the life of your dreams through financial independence. If you want to join me on this journey to financial independence, go ahead and hit that subscribe button. Alright, starting things off with the options trading tracker, you can see I have not made a trade in over a week. I'm still stuck in my last one, which I rolled out to December 17th because the market was melting last week. I am pretty sure it will expire worthless if I hold it until expiration, but I want to get out with profit as soon as possible. There is so much opportunity cost because I'm locked in this trade. And I have a new strategy that I really want to try out, and I really want to make some money this month, so I need my collateral back. So because of this unfortunate situation, my profits for week 2 of December is 0. The problem with only trading cash secured puts is the large collateral requirements, but I feel that this is the safest option strategy because the worst case scenario in these trades is ending up owning a stock that I personally like and believe in. I'm going to try to limit my stock purchases to $1,000 a week until I can increase my cash position in this account, hopefully within the next few months after tax season. This week I also did not sell any stock, so let's quickly go over my purchases. I did buy the dip on Monday, and that accounted for the bulk of my purchases for the week. I also made a purchase that was very different from my norm. I actually picked up one share of Tesla when it dropped to $978. I picked up this stock for a few reasons actually. First, I am upset with myself for selling all my Tesla shares a few months ago. I also think when this stock dips in the $900 range, it will jump back up, and I was correct. Lastly, I think a Tesla split will be happening within the next 6 months, so I did not want to miss out on that. This is the only share I will be purchasing unless Tesla splits. If they do split, I will increase my position to 100 shares and it will become part of my income strategy. This is a pure growth play for the portfolio for now, and besides my company stock purchases, this is the only other single company stock that I have purchased in a very long time, for the sole purpose of growth. All my other purchases have been ETFs. Besides that, the rest of my purchases for the week were pretty normal. I got the usual 4 shares of SPYG. I'm actually kind of sad I did not follow my instinct and buy more shares when it was $68 per share last Friday. It was already back to $71 by the time I woke up on Monday. The 4 shares I picked up brings the total in the portfolio up to 75 and increases our annual dividend income by $2. After that, I noticed that Chimera Investments stayed in the low $16 range this week, so I bought 6 shares to round out the position with 100 shares total. I will slowly build this position to about 170 shares before I let it compound on its own. It is a quarterly payer, so the quarterly dividends are enough to purchase about 2 shares per quarter on its own at the moment. Once I have enough shares, I will look for the next income stock to invest in as part of my diversification efforts. The 6 shares I bought this week increased our annual dividend income by $8.23. Next, here is a name that we have not seen in some time, Horizon Technologies. This stock remained in the low $16 range this week, so I decided to pick up 8 shares to increase the position to 170 shares. This position will generate $17 a month of dividend income, which is enough for it to buy 1 share per month on its own. The purchase also increased our annual dividend income by $9.01. Last week, I bought a lot of NUSI, RYLD, and QYLD. And it turned out that was when the bottom of the dip was. So I was a lot more conservative with my purchases for them this week, as they slowly climb back up. Many people, including me, are hesitant to buy on green days, but if we zoom out a week or two, we can see even though it is a green day, the price is probably still down, so we are still buying it at a discount, even if it's not the rock bottom of the dip. So I picked up 8 shares of NUSI this week, pushing the position past 100 shares. I will also be pausing my purchases on this stock once its monthly dividends are enough to purchase one share on its own. The 8 shares increased our annual dividend income by $16.54. After that, I picked up 11 shares of RYLD, which brings the total in the portfolio up to 163 shares, and generates $31.13 of annual dividend income. Lastly, I bought 9 shares of QYLD, bringing the total up to 148 in the portfolio, and generating $23.60 of annual dividend income. So this week I spent a total of $2,178.42 on stock, which increased our annual dividend income by $90.51. The purchases also increased our total annual income up to $2,956.45, which is a growth of 3.16% over last week, and bringing us 0.75% closer to our goal of $12,000 per year of annual dividend income. We're so close to a 25% mark. I know we're going to smash through that goal by next week. Alright, that's it for another Fire Fun Friday. Let me know in the comments below which stocks you picked up during the dip. Thanks for watching, and I'll see you guys on the next one.